Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of June 30th. It's the last day. We're going to start off on Monday, the last day of June. And what a week we've had. What a last great month we've had. We're coming into the end of June, and we are just killing the market in stocks right now. Stocks have been really, I think, really the place to be trading. I've been hearing a lot. I follow a lot of commentary out there. We're always keeping a kind of a pulse of the market, and you hear the talking heads out there talking about the lack of volume in the market, the lack of the range in the market. But you know what? The stocks have been great. They've been really giving us great signals and great entries and great exits, and I'm very happy with that, and that's really good. But we want to always continue to watch the overall markets, and in my case, we watch the S&P 500, and we also track the ES Mini. We also pay attention, of course, to NASDAQ, the Dow, the Russell, and all the different subsectors in the markets. But the S&P here is just a key one, and it has been really acting well. And on Day Trading Radio, I follow the stochastics very closely. I know different ways of following the stochastics. We know stochastics are a momentum indicator, and a lot of people just know them as of overbought and oversold level. But there's a lot more, a lot more going on there. There's different ways actually to read into the stochastics, just like there's different ways to read into stocks. And we know about divergences, we know about just simple overbought and oversold levels, but we also want to talk about the trend in the stochastic. Very similar to a trend in a stock where you move up, you pull back, and you move back up, and you put in two pivot areas, and you can draw that straight line, and you can pay attention to that line as the price comes back down to that line and becomes an area of interest. Same thing with stochastics. Stochastics, even more so, is a great timing indicator, because once you establish that strength, you don't get a full rotation. That's telling you the market is stronger. And it's holding, it's actually just showing good relative strength, and actually the momentum is very strong, so we don't get a full rotation. So once we put that level in, that's usually a sign that the market's very strong, and then we actually want to watch that next rotation back down, and that trend line that we put underneath is a great timing indicator. So we actually came back down to that and then turned back up, broke out of this flag. We actually pushed a little bit higher, pulled back recently, and then we come right back to that trend line, and we're actually seeing this market bounce today. And just amazing strength in the market. I put out a couple videos this month and a couple last week talking about the market radar, talking about what I expect this summer. And I expect this market to continue to grind higher. And the grind higher is just because, there is nothing here. The market has I'm going to go over this one more time. I do feel the market has, it's kind of a little puppet right now. It's a puppet screen. The Fed has the strings on it. It's really controlling it. Until, the policy changes, maybe the interest rates change, the taper finally comes to an end. But everything else right now, we have Janet Yellen now coming out and really putting out a good little speech there when she comes out and does a press conference after the Fed rate decision and their projections and stuff, and she seems to put a nice calming feel over the market. And again, I always go into this because a lot of people don't disagree on how the market's acting and disagree on how this country's run, and I'm not getting into that to argue with anyone. I'm looking at making money in this market and understanding how to make money in this market. You just go with it. You don't fight it. So the market has been going with this, and there's no reason for not to go with it. There really isn't. I mean, if you continue to fight the market, you're just going to get run over, and it's just a silly way of trading and placing your beliefs, overall. The market's always right. It comes down to the market's always right. You could complain, you could do anything you want, but this market's continue to move higher. There is going to be those pullbacks. There's going to be those little, this week we had some news coming out of Syria. We had some news in Iraq, Ukraine, Russia. We actually had a Fed president, to talk something, and we actually seen some little spike down in the market, but the market continues to rebound and push back up. So it seems like we have there's like a little destiny here with the market. 2000's above us, and that's a big whole number. A lot of people will be focused on that. There doesn't seem much reason to sell here yet, but we're always watching it. This is starting to look like a little coil stochastic. The coil stochastic is usually an indicator I use on the show. We talk about how the stochastics kind of coil either up or down And when you get a coiled stochastic, it's usually a good, when you have a trend line, trend underneath it that you could recognize. Usually when a coil comes up, it breaks down and we see the price break down. So we're going to pay attention to that. But everything here very strong, and it's very hard to short this market. I do have a few shorts on the table, and some of those shorts are working out pretty good. I mean, we had the short in CVS that worked out. The DPS is working out. The Aetna short is the one that we're having problems with. The Budweiser's working out. So the shorts are actually coming in because we're taking the shorts due to our strategy. We understand the pattern here. Where we have the risk reward trades. Budweiser, it was overbought. We pushed up against a trend line and started pulling back. Today, yeah, it's starting to look like a flag now. It actually looks like a flag that actually could break out here. So shorts have to be very quick, on their profits, take those profits off. The longs still seem to be in play, and that's what we're probably going to concentrate on. I do have some shorts I want to show you today that I have on my focus list, but I'm not going to press that too much until we actually see some market weakness and something here. Today, yesterday, I put out a video talking about the potential of this market pulling back, and I wanted to show you that because we're looking at the SPX. Let's take a look at the SPX. The daily here very strong. We have a series of higher lows on the stochastics, and that's just a very bullish trending market right now. And we actually recovered nicely today, being on a Friday. We kind of started off a little lower, but just sold off and came right back up towards the highs of the day, and kind of closed out positive right at the high. So it's just a very resilient market right now. But you can see we're starting to see a little weakness come into it. We kept getting some sell-offs, a bounce, a sell-off, a bounce, but we continue to come back. Now the 60-minute time frame is something I was paying attention to about 2 days ago, when we talked about watching this level fail, and we did that exactly. What happened was we looked at this as a pullback. I said the 60-minute time frame is oversold. Watch for that bounce, but what you want to watch for is this failure, and this was about here, and we got that failure, and the market broke down. But when the market broke down, I think it was some Fed commentary came out early, flushed the market out, and the market rallied right back up. And now we're kind of pushing right back up to those recent highs. The 60-minute time frame is kind of consolidated underneath an overbought level, and this is typically a very bullish scenario again. So we got to look at going into next week as a good, the market could just actually push a little bit higher now. 60-minute time frame is slightly bullish. The daily is crossing back up, and that's slightly bullish too. So with all that said and done, let's take a look at some of the stocks that we've been trading this week. And this is the important part. It doesn't matter what the market's doing. We're going to stick to a strategy that continues to work. Quality names, HPS methodology, recognize those patterns, take those stocks when they set up. It's the same thing, the old baseball analogy, wait for your pitch. Last week we didn't have as many setups as we had a couple weeks before, because the market really took off, and we were right up the highs, and we didn't want to get too extended there, and we did pull back. And we pulled back, and we got some good setups again, and we got back into them, and everything's been working good. I'm just very happy with how everything is going on, and that kind of motivates me each week to continue to not bring you anything less than the week before. So considering we had such a great week, puts a little pressure on me for this week coming up. So I have a nice list for you. I was really working hard all day on this. We're going to go over a lot of stocks, and I got a lot of great bets, best bets for you, and a lot of great stocks that are setting up. They're not yet triggered, and when we talk about not yet triggered, I'm going to give you an example, then we're going to jump over to the real watch list. But let's just take a look at some of the stocks we've been trading this week, just to give you, and again, I always split this video up in two parts. I always kind of send out the first part because it's kind of review, and it's also kind of a educational section of the watch list here. And then the second part is really for members only. So if you want to get that second part of the video, definitely check out Day Trading Radio. Sign up. All right, so let's take a look at some of the stocks we've traded this week. I'm going to go through all of them that we've taken off this week. We started at the beginning. All right, so we did have a couple shorts. CVS was a short, and it was a basic, again, this is kind of an educational, because this kind of rising wedge pattern is very important. Once you see a good established channel, overbought, oversold, what's that news in the background there? Let me turn that off, sorry about that. You see that nice rotation, and the trend line here squeezing up here a little bit higher. But once that price gets up towards that top of that trend line, you get overbought. You're looking for this trend line to eventually break down. And this was key, because we got the breakdown. I actually told you where that bounce was going to come. I said, when you look at a pattern like this, you're going to actually take this. Once you get oversold on the daily, it doesn't matter what's going on. He's usually going to get a nice little bounce, and we got that bounce. But I wasn't concerned about that bounce, because I had a feeling that when we have these patterns, you usually get those bounces before you break down. It's the old fake out, shake out in the market. The market loves to push the limits. Like you come down to a level, it's a wedge pattern. A lot of people will short here thinking it's going to break down, but what happens is it bounces and it shakes them out, and then it breaks down. So you always get that little bounce, and I said watch for this. I actually put these two lines in here. I said watch it move up and watch it move down. It's exactly what happened. We ended up taking profits into that before Walgreens earnings, but it ended up pushing back even further. But it was a good short either way. It was just a nice technical setup on CVS. FSLR, you know what? We own this stock. Own it. Here is an example of what we talk about, that rising stochastic trend line. And when we pull back here, when we establish that trend line, we have another pullback. It was just a textbook channel, a little pullback. We started pushing back up. Right when we started pushing back up, I knew we had some strength. We got in here, we got a dynamite run, and we pushed all the way up. We're still rolling up here. We've taken this trade probably 3 times in the last 2 weeks, and each time it's been a good trade, and we're in it again. So it continues to look very good, one of my favorites. But you can see what we look for. FSLR is not always going to be a setup for me, but it will be a setup once it establishes a pattern. The stochastics line up, all the indicators line up, and we have our high probability zones. So we've been trading this one. It's been working out great. I think a lot of people made a lot of money on that, and I'm very happy about that. MDRX. MDRX was a beautiful setup here. We got into it down here. It did pop up here, held on to it, pulled back here. I wasn't really upset because we had a nice rotation. And what we had here is the oversold level and a support line inside a recognizable pattern, which is a divergence. And we know that this type of setup usually breaks us out. So we broke out, we took profits, we started this flag. I like the flag, I like the setup, I like the embedded stochastics. We got back into it. Now we're in another profitable trade, and we're looking for another 50 cents on this, or 50 cents from our entry, which was under 16. And we'll probably get that going into next week. So this is a cheaper stock, and we're just going to continue to manage that. Dunkin' Donuts. You're starting to see what we do here at Day Trading Radio. Recognizable patterns. There's a very great technique in the playbook. It's called a channel within a channel, which represents an X marks the spot type of trade. Also, the divergences playing out, the lane divergences, all these things playing out. We get the initial bounce, we take profit, we come back here, we get into the trade again, it actually pops back up and then pulls back. Not where we come right back. Lots of times we'll see that rotation back to the trend line, and that ends up being the real buy area, because you take out the lows here, you take out the weak hands, you're still set up here because you rotate back into an oversold level, and it's about taking out those weak hands. It's the market is great at faking out people. Well, anyway, this day right here, I got in. I said this is the best bet for this week, as you can see. You would have to consider that a great move and a great setup. It moved up to our target of $46, and I got out of it. Most of us got out of it. Some people are still holding calls on it, and we'll get in it again when it sets up. Right now, it's kind of extended, and on the daily, and of course, the 60-minute time frame is kind of extended too. So it's not a trade I want to be looking at now. But it will be, again, because we know what it we know what it means. A rotation back down here, maybe another flag, something. We'll just wait for it. So Dunkin' Donuts here really bringing us a nice profit. The DGX, even though we took profits, still setting up pretty good off of this underlying trend line. Another style of trading here, the oversold stochastic underlying channel line. The bounce everything here working for us. I did take this off, small little profit, because it was kind of breaking back down. I didn't want this to break down. I'm a little cautious sometime on a rising trend line versus a lower trend line setup. So when I see a trend line like this, this wedge pattern, I'm more apt to take this setting here on a lower trend line because I like the big bounces versus a setup like this where we can actually break through and get a bigger move down. Whenever you have an upward rising channel, you want to short the top of the channel. When you have a downward pullback, you want to go long the lower channel. And these are all based on the overall trend. The overall trend here, well, not much of a trend going on here. And again, it worked out. It actually looks quite good going into next week. It's still on the watch list. And let me see if we can actually DGX show you what that looks like. All right. This is what you get on the HPS watch list. So everything gets alerted for you. Buy entry was 68. We took profits on this. It pulled back down to this trend line, and now we're going to look for this profit zone at 60.61. So this trend line gives you automatic stop. And again, just each one of these levels is put into our system. So if any of these levels are tagged, you get an instant email or text message, depending on what you want of the situation that's happening. So a great little system there we have going. So that's the DGX. Still active and still looks actually quite good. The trend line, of course, if it breaks down, it'll probably give you a stop out. I'm not in this one anymore. So that's fine, but it's still active on that setup there. Deutsche Bank, an interesting one. We took this back here. We had a great overnight trade on it, gapped up, we took profits, came back down here. We saw the same candle, I got into it, just didn't work out, I gapped down, I decided to take it off. We took it off for a $73 loss. But it did put in a little hammer there. This is interesting. I would love to get it on the lower trend line. It is giving a little hammer. I'm sure this thing has a shot of gapping up on Monday, and I'm sure it shook me for that. But there is, as you trade, you will come across stocks that you will take a loss on. This wasn't really an HPS setup. An HPS setup is one that has the multiple indicators lining up. So it wasn't on the trend line. It was the only thing it was going for it was oversold. But it's a stock. It's a scenario where I call it has stock rot. Stock rot is, if you look back at the chart here, you can see it's pretty much a downward channel here, and for an extended time. It's definitely not a pullback in an upward channel. This is more of a downward channel, and we're working on that trend line. We'd like to get it somewhere like this, where you have an underlying trend line, and you can buy it right off that trend line, and then you see the big move. Here, we're not on that trend line. Either way, we made up for it for many other stocks. The Valero gap down, and that was based on some news. That's the 1, 2, 3 pound. We ended up getting in on this as it was forming that hammer. And then we got a follow through the next day. We took it off, took profits on that. So we just moved on from that. And this is the type of market you just want to kind of take the opportunities when they come. Don't stick around too long unless you know the stock is really, really good, like a Google or something like that, where you could actually hold on to and feel comfortable. The week before, I don't know if we went over these, but like the CBOE wedge pattern, the lane divergence has been a powerful, powerful indicator for us here. And the lane divergence very clear on CBOE. The low, the lower low, the low, the higher low, and then the run up here. We took profits, pulled back. It's interesting now. So you remember that underlying trend line? We pulled back to the trend line. It's violating a little, not much. It still looks good, and it's starting to pull back. So it has a couple things going for it. First of all, when we have a wedge pattern, the instructions on a wedge pattern, everything that we want to look for in a wedge pattern, 65% area where you want to see that breakout, and a measured move on the wedge pattern is that a downward wedge. You take that underlying wedge, underlying trend line, keep that stationary. You take that top one and you move that to a parallel line, and that's usually your first exit area. And you can see this is basically dead on to that level, plus the 50-period moving average. So we had a nice pullback from that level. If we put a little line in there, you'll see we were overbought and a trend line. So that was an HPS short zone. And we pulled back, and now we've pulled back to that trend line. and we pulled back and it's starting to move back up. It's starting to hold that. So it's actually now a real channel with a little divergence pushing back up. Not even a divergence, but just that slight push back up. It's not something I'm interested in right now. I think there's other great ones setting up for that, and that's on the next part of the video. But just an example of how to read that wedge pattern. And there's been a lot of LMCA. Another great wedge pattern we traded. And again, this was that divergence setup. Inside a wedge, a double bottom oversold, 65 to 75% into the pattern. You look for the breakout. And there you had it. We had our breakout. We had our great trade. So again, just been keying in on these, and we're not going to take anything less than that recognizable pattern, that pure HPS zone. I got a lot of them for you today. Can't wait to show them to you. We're going to get started on that. But is there anything else I want to show you? I wanted to do a couple reviews just for educational purposes. KMI, a great channel within a channel. This is one of the better setups here. When you see a downward channel inside of a downward channel, when they both connect, it's usually called X marks the spot. And you have to really give yourself an area to be interested in. You can't just say, I want to pick it up at 63.20 on the dot. You know, it might come back to 62.24 and you miss out on it. Understand that this type of pattern, as you channel out, you know, and you come down to the lower channel, and this is a downward channel which typically breaks higher. This is a downward channel, typically breaks higher. It's a quality name. Overall, great setup, and you can see how that moved up. And actually a coil stochastic channel breakout too, so that's also good. And that first rotation pullback, you know, has a lot of things that we look for in HPS, what we call the HPS playbook. We have the channel breakout, stochastic rotation, first entry back into it defines a new trend line, and you know, now we have a nice upward trend, and from that point on we really broke out. It's not a trade that we're looking at now, but these are the type of trades you want to look for. Ice Baby is coming alive here. You can see the support line underneath us just getting oversold. It looks like a divergence playing out here. Really nice recognizable pattern. I love to take these trades off these lower trend lines. You might see this one on the watch list. I'll show you next. Con Edison. Great channels. Channels within channels always work out really great. That first pull, once you get that breakout of that channel, that first rotation comes back down, you start to push back up, you're breaking out. This continues to look very good too. There's a lot of stocks out there that look good. CBOE, that we traded this, we just talked about this, right? Yeah, that was a channel breakout. Sorry, I got that on my list twice. DGX did that one. AGU, X marks the spot, another example of a channel, downward channel, upward channel. Two channels intersecting gives you that kind of X right there, and you want to, you know, what I always do is I give you a range. I give you that range here. It might be between 92 and 90 to take your entry zone. Long as you have the oversold stochastic, the underlying trend line, the rising trend line, the X marks the spot, and the kicker you always want to look for is that candlestick. This one didn't really have a great candlestick, but you can see the results from that. I mean, that's, you know, just perfect. And the list goes on and on and on and on and on. But this video has gotten down to 23 minutes, and I haven't started the watch list yet. So we're going to do the watch list because I have a lot of great stocks on it. So again, check out Day Trading Radio if you're not familiar with it. I think you'll love it. And now let's start the watch list for this week coming up.